Good morning, May 6th, 2026. Here's what's happening right now. Oil is crashing, gold is surging, and stock futures are pushing to fresh highs. That combination matters, because the market is suddenly pricing a real Iran peace deal. Reuters and Axios are both reporting that the United States and Iran are closing in on a one-page memo to end the war. In this video, I'll walk you through what changed overnight, where the market is trading right now, and the three setups I'm watching into the open. Here's the main story. Overnight, Pakistani officials told Reuters that the United States and Iran are closing in on a one-page memorandum to end the war. Axios confirmed the same framework. Then, the Iranian Navy followed up with a statement saying safe and stable transit through the Strait of Hormuz will resume. The headline traders have been waiting on for weeks. And you can see the reaction immediately on the oil chart. WTI crude is plunging, 92.14, down nearly 10% on the session. Look at the structure. Price had been pressing the upper rail of an ascending channel going back to early March, with 4 clean touches on the lower rail. Overnight, it broke decisively below the lower rail on heavy volume. By Edwards and Magee's filter, that's a textbook breakaway gap to the downside, a highly reliable signal that the prior trend has flipped. The operative level now is $90. If crude loses that on volume, the measured move from the channel projects toward the 80 to 85 range over the coming weeks. If we get a sharp recovery back into the channel, that would be a bull trap. Low reliability as a sustained recovery, watch for whipsaws. Now look at gold. And this is the surprising one. You'd expect peace headlines to crush gold. Instead, it's ripping higher. 47.09, up over 3% and printing fresh record highs. On the chart, this is a clean ascending triangle resolving to the upside. Flat resistance near 46.50, rising support since mid-April with 4 clean touches. Volume confirmed the breakout this morning. By Edwards and Magee, ascending triangle breakouts are highly reliable, and the measured move targets the 4800s. So why is gold rallying on peace news? The answer is the dollar. The dollar index is breaking down, 97.81, down 0.6 today, and rolling over a multi-week trend line. A weaker dollar lifts gold mechanically, regardless of geopolitics. My read is, peace is bullish for risk and bearish for the dollar, and gold is moving on the dollar story, not the war story. One more piece, energy. XLE is breaking down hard, fading the entire war premium that was priced in last month. This is a textbook bear flag resolving lower, moderately reliable on its own, but with crude crashing, it has follow-through behind it. We'll come back to this one. Here's where the market is trading right now. S&P futures 73.46, up 0.8 and pushing to fresh highs. This is a clean breakout from a 2-week rectangle, moderately reliable while we hold above 7,300. Nasdaq futures 28,533, up 1.4%, leading the rally. Nasdaq is testing the upper rail of a rising channel going back to mid-April. A decisive close above 28.5 on volume would be a highly reliable continuation signal. Dow futures 49,906, up just under 1%. The Dow is grinding higher inside a symmetrical triangle dating back 3 weeks. Moderately reliable continuation play if it breaks 50,000 on volume. Russell 2903, up 1.8%, the strongest of the 4. Small caps love a weaker dollar and falling oil. Watch the 2,900 level. That's the resistance that's already rejected price 3 times this quarter. Gold 47.09, up over 3%. fresh record highs and the breakout we just walked through. Bitcoin, 82,500, up 2%, pushing back through 82,000 for the first time in days. Dollar index, 97.81, down 0.6, rolling over hard. And crude oil, 92.14, down nearly 10%, the one to watch for the rest of the week. So overall, stocks ripping, oil collapsing, gold surging, dollar falling. Key number into the open. Watch whether S&P futures hold 7,300. That's the line between continuation. 3 setups I'm watching today. First, energy. XLE is the energy sector ETF, and with crude crashing nearly 10%, this is the most direct trade on today's headlines. Look at the chart. XLE has just resolved a bear flag formation, a sharp drop from last week's highs, then a tight counter-trend consolidation, and now breaking lower on volume. By Edwards and Magee's half-mast rule, the post-breakdown move equals the flagpole. That points to another 5% leg down from here. The operative level is the recent consolidation low. A daily close below it on volume confirms moderately reliable. If price reclaims the flag and pushes back inside, the breakdown fails and the energy short unwinds quickly. Second, gold miners. GDX has been coiling for 3 weeks, and now that gold is breaking out, the miners are dragged with it. On the chart, this is a textbook bull flag. Sharp rally last month, tight downward sloping consolidation, and now a clean break above the upper rail with expanding volume. Highly reliable continuation pattern when the breakout confirms on volume. The half-mast measured move targets another 7 to 10% upside as long as gold spot holds above 4,700. The risk? If gold rejects and falls back below 46.50, miners give it all back and you get a bull trap. Low reliability if gold can't hold the breakout, so the gold level is the real tell. Third, Bitcoin. BTC is back above 82,000, and the structure here is a rectangle between roughly 80,000 and 83,000 going back about 2 weeks. Spot Bitcoin ETFs took in nearly $1 billion over the past 2 trading days, per CoinDesk. Real institutional bid coming back. The operative level is 83,000 on the upside, 80,000 on the downside. A decisive break above 83 on volume opens the path to 85 and beyond, moderately reliable. A failure here and a loss of 80,000 puts price back into the prior trading range. Low reliability as a short below that level. Watch for whipsaws. The volume's been thin on the downside tests. So 3 patterns to watch. A bear flag breakdown in energy, a bull flag breakout in miners, and a rectangle level test in Bitcoin. All 3 are direct expressions of today's peace deal narrative. So here's the takeaway. Oil is crashing, gold is surging, and stocks are pushing to fresh highs. The market is pricing a real Iran peace deal. Watch oil. That's the cleanest read on whether this rally has legs. Today's action will tell us if the trend holds into the close. See you all tomorrow at the same time. This is not financial advice. For education purposes only.